Good morning, welcome to this update on Wednesday the 3rd of August, brought to you by Phoenix Blue. I'm Tom Colley and I'll talk to you about the news and the markets. Yesterday was a lot more interesting than Monday. We saw significant dollar weakness yesterday. We've got ongoing weakness and even a technical bear market on oil again. We've seen 9 out of the last 10 days bearish. That has brought a return of fears about growth worldwide. So we've also seen a return to a risk-off scenario, which we'll show you reflected in the charts in a moment. Over for the news, yesterday we had some construction PMI from the UK. We've also got services PMI due out at 9:30, but this week the pound is going to be totally dominated by 12 o'clock tomorrow, when we have the Bank of England rate decision, where we're looking for a potential rate reduction or further quantitative easing. We did have some good numbers yesterday afternoon on the dairy index from New Zealand. They gave a bullish move on the Kiwi, supported by a lack of or a weakness on the US dollar. Going forward today, this afternoon, we've got ADP non-farm employment change and non-manufacturing PMI, and these may give us some sort of heads up for the figures for non-farm payroll on Friday. We also have crude oil inventories out of the States at 3:30 this afternoon. Obviously going to be very interesting in the light of the recent moves in crude. So we'll be watching that closely this afternoon. Early hours of the morning tomorrow, we also have retail sales for the Aussie ahead of the big one, which is Bank of England, as I've already mentioned, 12 o'clock tomorrow. Okay, dollar weakness. This is the dollar index, a daily chart. This is the move we can see. So it's the first day for since, I think that's Thursday last week, since we've had that dollar weakness. That dollar weakness was on the back of FOMC. We're potentially today going to see a pullback to this 95.40 level before more downside in this market. We have NFP figures on Friday, so they will probably determine whether we come down here to this key level at 94 at the bottom of the channel, which looks likely now. We've broken this significant level, or if the figures are particularly good, we may see upside and a return above that level. Okay, that's been reflected. The dollar weakness has been reflected by yen strength. Key level here at 100.75, technical level, and then we've got a couple of other levels at big number 100 and big number 99, where immediately post-Brexit we saw these as being intervention by the Bank of Japan. Will we see that again at this level if price falls below that? We're going to be watching that and potentially trading, taking opportunities to trade that, looking for that intervention once again. Alongside that, we've seen a risk-off scenario. Here we can see the Nikkei 225 in Japan. We had a bearish day yesterday as monies came out of the equities markets on the fear of world economies and lack of growth. That moved over to safe havens. One of those safe havens is the Japanese yen, so that's another reason why we're seeing a strengthening yen. We also saw a significant sell-off on the S&P and the Dow and the Nasdaq in the States. That was a nice big move yesterday if you caught that. However, I'm now seeing a significant level here. If we see a break of that, then next target level is going to be around these highs there. So I'll be looking for an opportunity to take a break, retest, and trade that short. If you look at the Dow, you'll see almost identical setup on that as is normal. Over on the DAX, we had probably the biggest sell-off from the risk-off scenario yesterday. We were here at Phoenix Blue yesterday. We'd missed an opportunity to get in earlier on the day before, and that became a big significant move. But we now are at a very, very significant level through here. So again, I will not be looking to do anything until we've had a daily close below this level and a pullback to take the market further down to these lows at that level. So both, that's the DAX and the American equities markets, sitting on significant levels. If we see a further risk off through the day, we'll see those levels broken, and then we should have more room for the downside on those. We're talking risk off, so we expect strength in the safe havens. Here's gold. That's exactly what we got through yesterday. We got a bullish buy yesterday. We're in and around quite a key level here. We've got a horizontal here. This is a long-term weekly stroke monthly trend line. So we're looking for an opportunity to take this market short from one of these levels or within this box here. If the risk off scenario is only short-lived, if we see a break of those levels on the equities markets, on the S&P and the DAX, we could quite possibly see this market taking out the highs, where we'd be looking for a retest of this 1375 level to take it back to the long side. That's despite having a commitment of traders, extreme signal that suggests the market needs to pull back. However, it will only do that if the risk on scenario returns and allow it to do that. There's been a commitment of traders, extreme signal, almost entirely through this period through here. We've had small pullbacks, but we haven't had the opportunity to take a full breath. If that does happen, levels of interest will be looking to trade down to the 1300 level. If that holds, we'll be back on the long side with our long bias in this market. If we get a break below, we'll be looking to trade that down to the next significant level at 1250, where again we'll be looking for a reversal to take that back to the long side, along with our longer term, or our, to be fair, our all year bias on long on gold. Over on the FX market, well, we've seen some movement for the first time for a day or two, all brought about by weakness on the US dollar. Here we've got the euro breaking a significant level. Interestingly, on the pound is up at the top of a range here. We've got a top of a triangle. This all suggests that the market is expecting to be disappointed by Mark Carney at the Bank of England. Tomorrow expectation is high on a rate cut and or significant quantitative easing. This would suggest that the market is going to be disappointed. I'll be looking, if that is the case, tomorrow I'll be looking for a break to retest that level again to take this market long if we don't get any form of stimulus or a rate reduction. If we do get a rate reduction, then we'll be looking to the downside, but I will be looking for these lows to be taken out here before looking for an entry to the further to the downside here. If we get something really significant, we could seriously see 1.25 as a longer term target on that. Over on the Aussie yesterday, we had early morning yesterday, we had the rate announcement. The RBA reduced the base rate in Australia from 1.75 to 1.5%. That was expected, had to some extent been built into the market with this bearish bar the previous day. We saw the announcement, we saw a spike down, immediate return, and then the market actually went long. Now, we're still bearish this market, but it will require some dollar strength returning in order for the downside to play out. As you can see, I've got an order in place here. It's quite a non-aggressive order. It's a big stop. Looking for price to come into that level with target down here, which is the point of control of this triangle here. That will be our T2 target. We'll be looking to get into this market and get profits off the table by that point of control there. Over on the Kiwi, we mentioned this, we had some decent dairy figures yesterday. We saw a bullish move on that. Some of that's been countered again this morning, but I am very interested in this level here. So we'll be watching for price to come up to this level, looking for a reversal at that level. Unless we get concerted dollar strength, I will only be looking to get in and out of the market at that level. If we see dollar strength play out and the NFP figures are stunning or whatever, then targets to about the 6,950 level down here would be more sensible. Over on CAD, again, we are seeing CAD not weakening as much as we might expect, simply because, again, on the other side of this is dollar weakness. Yes, we've got a falling crude price. We'd normally expect price already to be up at this level or above, but that's being offset by weakness in the dollar. In this respect, again, like New Zealand, I'd be interested in a reversal at this level, particularly if we don't, in this instance, get a return to dollar strength. And we could see a small move back down to the bottom of the channel on that basis. Crude's currently sitting below $40, but is potentially reaching some sort of bottom and in need of a pullback. Okay, guys, so that's a look ahead to today. If you like what you see, if you like the fact we use blank charts, well, not blank charts, but charts without indicators, we trade levels, we trade with the banks and institutions, we use commitments of traders analysis, we also use seasonal analysis. You haven't seen what we will also be doing, trading on commodities there. We do from time to time show you on this morning update. If any of that's of interest to you, we have a free afternoon's trading with two of our most senior traders here at Phoenix Blue on August the 24th in London, running between about 2 and 6 p.m. Completely free to come along, trade alongside them through that session, assuming there are opportunities around. Also plenty of opportunity to be shown things, pick up new tips, see exactly how Phoenix Blue trade, and also question and answers session after. If you are interested in that, simply go to the Phoenix Blue website, www.phoenixblue.co.uk, go to the events page, click through here, and that will allow you to complete your details. We'll then send you an invitation to the event. Okay, guys, that's it for this morning. Thanks for your time, and we will look forward to speaking to you again in the morning ahead of the Bank of England decision. Thank you and goodbye.